out of the U.S., helping to kind of reverse the initial pop we saw on worries about tensions between Saudi Arabia and Iran. The fact that those gains in oil didn't hold, despite the fact that you have these major producers involved in escalation of tensions here, does that surprise you? And does it additionally suggest that it will take quite a huge factor to get additional upside in oil?
It doesn't surprise me because for any risk premium, I do believe there is a huge risk premium potentially out of the Middle East region if especially Iran and Saudi Arabia were to go in an all-out conflict, because those two put together contribute to almost 14 million barrels per day of crude oil in the market. So yes, there is a potential for high risk premium, but we haven't seen the conflicts intensify to a extent where the supply will be disrupted. And because we have not seen that yet, and also at the same time, we are living in a market of oversupplied crude in the excess of close to 1.5 to 1.7 million barrels per day. I'm not surprised that the markets that gave the knee-jerk reaction yesterday have come back to reflect the reality, which is what we are seeing is an oversupplied market.
An oversupplied market, but also this reality of demand when we talk about the data coming out of China, and a lot of concerns that the rebalancing in China is not going to offset the decline in the industrial, the manufacturing side. Isn't that so?
Absolutely. In fact, I was about to say that demand picture is not looking that great either. 2015 started off with a spectacular growth in demand year on year, around 1.7 what we saw on average. But by end of 2015, we started seeing slowdown in demand, particularly from the main drivers, that is China and also US. China by end of November has given a contraction in demand year on year growth of close to 1.8%. US, which was growing at 4.4% in the first three quarters, has slowed down to 0.2% year on year in apparent demand growth. So all this is adding to the bearish note. Also remember 2015 was a high demand, so 16 will also have a pressure because of high base effect from 2015. So remember that will also play an impact on the overall growth in demand that we see in 16.
Before I let you go, will WTI trade at a premium again against Brent in 2016 once the oil exports out of the US pick up? Yes or no?
I think it could, for momentarily, not for a long time, because it just makes no sense. You are still expecting WTI to move from Cushing to Gulf Coast, and that pipeline cost has to be taken into account. But yes, momentary, yes, when the stocks go down in Cushing and as exports start, you could see that at premium for a while.